Are we clear in the... Anybody else?
Yep, that's it.
7 o'clock, we can go.
Right, ladies and gentlemen, this is, please do not remove microphones. Right, this is a new venue, as you realise, very exciting, and it's thanks to one of our members who said, why weren't we meeting here? And we said, well, we'd never thought of meeting here, actually. So welcome. It's a very small, august company this evening, but we have, I hope, a lot to learn. But the first thing is, if I get myself right, is we're going to record the event, see how that works. We will have a video. We're not quite sure what we're going to do with it, but it's all new territory. From a parish announcement point of view, we're going to have the AGM on the 31st of March, and I'm hoping there's going to be a speaker, but Amy is not quite sure who it is. That's usually an event at which 3 people turn up, which is absolutely fine by me. But the speaker will be following the AGM. The next event is on the 23rd of April, Professor Douglas McWilliams. And what is he?
He was the author of The Flat White Economy.
Oh, The Flat White, oh yes. It was a very good book, which I read and thought, this guy looks interesting. And it's about the whole new world of technology startups, and all the exciting things that go with the future. But this evening, we have really, I'm pretty sure it's going to be absolutely fascinating, because Brian is, I suppose, steeped in financial journalism, going back the second half of the last century. Working in Hong Kong, was in Hong Kong during the handover to China, worked in the Middle East, but since 95 was with Euromoney, and then joined The Banker, which is the banker's own personal magazine, which is really fascinating. And this evening, he's going to take us through, he says, the world once dominated by American banks. You might have said before that was British banks, but then they lost it to the European banks and the Japanese banks, and today the world is dominated by Chinese banks, effectively. Although sitting here in our sceptred isle, we're not totally clear about what Chinese banks do, but they are probably now the biggest, the best funded, the most well-organised, and the most commercial of all the banks in the world. So I leave it with Brian.
Thank you very much.
Good. Well, thank you very much for coming. So in July this year, we celebrate 50 years of the Banker's Top 1,000 World Banks ranking. So why is that important? Well, if you're a banker, you'll know the ranking probably, because it's something that the banks use as a way of kind of getting a gauge around counterparties that they deal with the world over. You've got a trade line to a bank in Brazil, you want to know their financials, you use the banker's ranking. If you're a publisher like we are, you soon understand that bankers love awards, because they're always unpopular, so they get an award, they feel good, and they love rankings, because they're very competitive, and they like to see where they come in these rankings. So you don't go too far wrong in banking publishing if you run rankings. But if you're not a banker, and you're not a banking or financial publisher, there's a big sort of, so what? So why should we be interested in a ranking of global banks? Well, what I hope to show you this evening is that clearly banking is an important industry, and over the 50 years that we're going to cover, it's been through extreme change, and clearly it's very important, as we found out in the financial crisis, to our general economic health. So a little bit first about how we do the ranking. It's based on Tier 1 capital. It hasn't always been. We've done it on assets. You could do it by assets, profits, I guess, Tier 1 capital. Clearly, if you rank the banks by assets, which is how we started out, you're taking a punt on what they've got on their balance sheets, because their assets are obviously their loans. We found out with Royal Bank of Scotland it didn't have very much on its balance sheet, right? Whereas Royal Bank of Scotland at one stage was the largest bank in the world by assets. So we switched about halfway through to Tier 1 capital, because that gives you a sort of feel for the strength of a bank. So in the banker's office, we have a team of analysts, and their job, month in, month out, all year round, is to collect the data on the banks and to plug it into our system. A lot of the data is actually in the public domain, but the value obviously is that we bring it all together. In the system, we've got about 4,000 banks, with about sort of 20 different data points each, and you can sort of play around with it and manipulate it, and we sell it as a separate online service. So 50 years of rankings, and what I'm going to attempt to show you is that if you think at the moment that banking is facing some challenges, which it definitely is, the reputational problems since the crisis, the regulation, the threat from digital banking, the sort of long-running period of low interest rates, which is very difficult for the banks. What I intend to show you is that actually banking has always been facing challenges and always having to respond and find new opportunities. And the other key point is going to be that, which as I mentioned earlier, banks rise and fall. So we're going to look at it mostly by nationality. American banks rise, European banks rise and fall, Japanese banks rise and fall. Now we've got the Chinese banks that are dominating the global scene, so what's the future for them? But clearly you could also look at it in terms of different parts of the banking pie. So investment banking had its heyday up until the crisis perhaps. Since then, it's all been about transaction banking. Now it's about sort of payments and online payments. Okay, so I'm promising you 50 years of history in about 20 minutes. Right, so we're going to start in 1970. So usually I say, who can remember 1970? And I say, well, none of you. But actually, I think some of you might be able to remember 1970. But if you can't, I'm going to give you a few sort of aide-memoirs. So in 1970, the President of the United States was Richard Nixon. And we had two British Prime Ministers, Harold Wilson, who then lost the election to Edward Heath. And if you've been watching The Crown, you'll know that the Queen had a lot of affection for Harold Wilson and didn't like Edward Heath very much, which is all the more surprising because Harold Wilson was regarded by the establishment as a mad leftist, a bit like Jeremy Corbyn is now. In 1970 also, a pop group called the Beatles disbanded, the Norwegians discovered oil, and China's economy at that time was 1/10 the size of the US. Now it's 2/3 the size. So you can see a big change in economics then. And the Soviet Union was the second largest economy in the world. And the bankers' first ranking of 300 banks at that time, based on assets, the top 10 banks look like this. So you can see that we've got an American list. We've got 7 US banks, 2 UK banks, and 1 Italian bank. And the point of this talk is to tell you that banks have come and gone. Now, in the case of Bank of America at the top, with 25 billion worth of assets, it's been one of the most consistent banks. And you'll see tonight there's only one ranking it doesn't appear in. And when we get to 2019, the latest ranking, because we're doing the 50th in July, which is when we had the latest numbers. So we actually have the latest ranking in July, so we're just ahead of that. Bank of America is still in there in 6th position. In second place, you've got First National Citicorp. That then became Citibank in 1976. In 1998, it merged with Travelers, and in 2019, it's still in 8th place. But now you've got something rather interesting, because you've got 4 banks here that merge into one. Because another feature about banking is banks get big, They get huge asset bases, and then they go through a period of consolidation. So what we've got here is we've got manufacturers Hanover in 5th place, which merges with Chemical in 10th, and that's in 1991. They then buy Chase, which is the 3rd place, in 95, and then all of that merges with JP Morgan in 6th place to form JP Morgan Chase, which is obviously one of the biggest banks in the world today. Another rather curious one here is Western Bancorp. That was first America, then it was first Interstate Bancorp, and finally it was bought by Wells Fargo in 1996. Wells Fargo was actually one of the winners of the crisis in the sense that from becoming a sort of mid-sized American bank, it actually became a rather large bank. In 9th place, we've got a bank called Banca Nazionale del Lavoro of Italy. That was bought by BNP Paribas in 2006. We've got Barclays in 4th place, which is obviously still Barclays, although these days it's only around about 25th in the ranking. And then we've got NatWest in 7th place. Well, you all know about NatWest. It was bought by RBS in 2000, and then quite a lot happened subsequently. We'll talk about that a bit later. No Chinese banks, by the way, in this ranking, because the bankers' editors at the time, what were they going to do with Chinese banks? Of course, China was still a state-planned economy, same with the Soviet Union. So they didn't feel it was reasonable or you were comparing like with like if you put state-owned banks in a ranking of banks from capitalist economies. So they left Chinese banks out. They figured out the Soviet Union's main bank, Gosbank, would have been the second largest bank in the world, so they left that out. And they only allowed Yugoslav banks in because, if you remember, Yugoslavia was a sort of hybrid capitalist communist economy. It had a sort of market system. So they decided that Yugoslavian banks were recognizable enough to be allowed into the ranking. Okay, so that's 1970. Now we're going to move on 10 years. By this time, the President of the United States in 1980 is Jimmy Carter. The Prime Minister of the UK is Margaret Thatcher. UK inflation stands at 18%. There's a new TV station called the Cable News Network being launched, CNN, as we know it today. And in China, we're now in the era of Deng Xiaoping and the open door policy. And interestingly enough, this first special economic zone was established in Shenzhen in 1980. And if you remember, it was just supposed to be an experiment. You know, Deng Xiaoping said, why don't you do it over there in Guangdong province, a long way away from us, and we'll see how it goes. And the bankers' top 500 now, not 300, 500 banks based on assets in 1980, looks like this. So now we've got a bank ranking which is much more dominated by European banks. So we've got 7 European banks here, 2 US banks and 1 Japanese. And we've got 4 French banks. And this is all rather interesting because we've got Crédit Agricole in first place, right at the top there, which interestingly enough has 4 times the value of assets that Bank of America had 10 years earlier. So you have to be 4 times bigger over those 10 years to top the ranking. But French banks are kind of interesting because Crédit Agricole is owned by cooperatives. BNP, Banque Nationale de Paris, was at this time a state-owned bank, as were Crédit Lyonnais in 6th place and SocGen in 7th, because the French banks were nationalised by the de Gaulle government in 1945, and only 4 years later, after this ranking, in 1984, did they start to deregulate them. So one of the interesting things about being a nationalised bank, of course, is that you can operate on very low capital with a very big asset base, because you've got a sovereign guarantee. So I think that's what distorts the ranking slightly. It allowed the French banks to basically punch above their weight because they didn't really need that much capital to be that size. Anyhow, Crédit Agricole has fared rather well. It's still the 12th largest French bank, but Crédit Lyonnais, poor thing, got into trouble in 93. I think they lent too much money to Hollywood film studios. Not a good credit, I don't think. They ended up being rescued, and eventually Crédit Agricole took them over in 2003. BNP, of course, merged with Paribas to be what we have today as BNP Paribas. You've got 2 German banks there, Deutsche Bank in 5th place, Dresdner in 8th, Dresdner merged with Commerzbank. It's part of Commerzbank now in 2009. And there's obviously been a big discussion about whether Commerzbank and Deutsche Bank would also merge, but they haven't managed it yet. And then you've got Barclays in 9th place. And this is the shape of things to come. You've got your first Japanese bank in there. So watch that, because we're going to see a lot more of Japan in this ranking. Okay, 10 years later, 1990, the occupant of the White House is George Bush Sr. Margaret Thatcher resigns. Nelson Mandela is released from prison. And a year previous, don't forget, to 1990, we had the fall of the Berlin Wall, and we also had Tiananmen Square. So politics was a bit tumultuous. But this was actually the start of China's big, long growth, because it started growing at about 6% a year then for the next 30 years. And in Japan, we were witnessing the start of the collapse of what I would say was the biggest asset price bubble in history. As you said in your introduction, I mean, I was out in Asia at the time, and it was said that the property value of the land of the Tokyo Imperial Palace was worth as much as the whole of the land in California. And the stock market hit 40,000. The Nikkei hit 40,000 in late 89. It then collapsed. 30 years later, it's only now back at 23,000. So that, ladies and gentlemen, is an asset bubble. And it certainly affected our ranking, because now you get a ranking where it's dominated by Japanese banks. And we're in 1,000 banks now, and we're ranking on tier 1 capital. So clearly, you get a big drop in the value you need to be at the top, because you're not looking at assets anymore, you're looking at tier 1 capital. But obviously, there's a relation between the two, or there's supposed to be. Right, so now we have 6 Japanese banks in the top 10 here. The top 3 banks are all Japanese. I think there's another interesting aspect here to this, which is there's no American banks in this ranking. And I was looking online, it's like, I think this is related to the Plaza Accord, because you basically had a policy of weakening the US dollar and having a rise in the value of the yen. We use the dollar as our base currency, so that's obviously going to push the Japanese banks up the ranking. You've got your one French bank at 4th, that's Crédit Agricole still there. Your UK banks are Barclays and NatWest in 7th and 8th positions. No US banks. This is the only listing without Bank of America in it. But asset bubbles, as we know, burst. So we had the most incredible shakeout from this. So I'll run through it rather quickly, but it's quite complicated. So Sumitomo Bank, I mean, you have a whole phase now of mergers and sort of shrinking of the Japanese banks. So Sumitomo Bank, which is number 1 there, in the current ranking, that's 65th. So that's how much it shrunk. Now, Daiichi Kango, which is in 2nd place, in 98, that merged with Fuji Bank in 3rd place, and the Industrial Bank of Japan in 10th place, and that gives you a bank today we call Mizuho Financial Group, one of the big Japanese banks. It's 17th in the ranking. Now, the other big Japanese bank is Mitsubishi UFJ, which is 10th in the ranking in 2019. And it starts to be formed out of Mitsubishi Bank, which is number 6. That merges in 1996 with the Bank of Tokyo to form the Bank of Tokyo Mitsubishi. But then there's the other bit, there's the UFJ bit. So UFJ was formed in 2001 out of Sanwa Bank in 5th place, together with Tokai and Toyo banks. And Toyo Bank was the bank that they had for the Toyota Motor Company, because the big motor companies had their own banks in those days. And then in 2005, those two halves fit together. UFJ joins the Bank of Tokyo Mitsubishi to become what we have today, which is Mitsubishi UFJ. So a very complicated story there of Japanese banks. Right, 10 years ahead, we've got to the year 2000. We've got a different Bush in the White House. This one's George Bush Jr. Tony Blair's the UK Prime Minister, and he had a budget surplus of 2%. All right, can you believe that? Will we ever see that again? The Millennium Dome opened. There was a TV show called Big Brother was launched. I still haven't watched a full episode. I swear, I still haven't watched a full episode. And Beijing is awarded the 2008 Olympic Games. And 2 years after this, of course, we're going to see the launch of the euro. And in 2000, your bankers list looks like this. So I think this is interesting because you're starting now to get something that looks a bit more like an international list. You've got 3 US banks, 4 Japanese banks, 1 UK bank, 1 French bank, and the first Chinese bank in at 10th place there, that's Icbc. So watch that because this is where we're going in the next 20 or so years. You've got the Japanese banks down to 4 now, Bank of Tokyo, Mitsubishi, and you've got Daiichi Kango still there in 6th place, Sakura Bank 8th, Fuji 9th. And the US and UK banks are back at the top. Citigroup's number 1, Bank of America's number 2. And then you've got this strange bank called HSBC. Well, where did that come from? HSBC was obviously the Hong Kong and Shanghai Banking Corporation. It was basically a Hong Kong-based bank. Until in 1992, it acquired Midland, one of the big 4 clearing banks of the UK, and it switched its headquarters from Hong Kong to London in 1997. And it had to do that because the Bank of England said, if you're taking over a UK clearing bank, your headquarters have to be here. You can't have them in Hong Kong. Obviously, there's been a lot of discussion in the last 10 years about whether Hong Kong bank should switch itself back to Hong Kong or even China. And HSBC started off on a big sort of globalization plan, which frankly hasn't worked out too well. So in 97, it bought Bamarindus. That's a big Brazilian bank, but things didn't go well in Brazil. It pulled out some years later. It bought Bital in Mexico in 2002. The Mexican franchise is still a large franchise, but that was also the one that got it into trouble for the money laundering problems that it had. But worst of all, in the US, it bought Household, which was a consumer credit company. And the reasoning behind buying Household was they thought, oh, we've got all these emerging market assets. We need to have something to divert ourselves away from emerging market risk. So they bought basically a subprime company in the US. So it was a fatally bad decision. And then, but much better than that, they bought 20% of the Bank of Communications in China in 2004. And clearly, HSBC's future now is as a Chinese, Asian bank, much more than being an international bank. And then we have Icbc, one of the big Chinese banks that was spun out of the People's Bank of China after the open door policy, in 10th position. Right, so that was 2000. So we're rapidly getting up to date now. So in 2010, the US President's Barack Obama. David Cameron is the UK Prime Minister. I'm sure you haven't forgotten him yet. China overtakes Japan to become the world's second largest economy. There's a volcanic eruption in Iceland which grounded the world's aircraft. In my case, it actually got me stuck in Beijing for 2 weeks. And Greece was downgraded to junk, and the IMF and the Eurozone had to launch a first bailout, the first of 3. And by the way, we were in the middle of a swine flu pandemic which killed up to 500,000 people. But I don't seem to remember it being that big a deal at the time. Anyhow, the ranking looked like this. So now we have 4 US banks, 3 from the UK, 1 French bank, 1 Spanish bank, 1 Chinese bank. So Icbc has now moved up from 10th to 7th in 10 years. But by the way, its capital has gone up about 4 times. So you can get a feel for how fast China's starting to grow over those 10 years. In the 4th place, you've got Royal Bank of Scotland. By 2010, of course, this is a majority state-owned bank. And in 2008, 2 years before this ranking, Royal Bank of Scotland was placed 3rd by Tier 1 Capital, but it was number 1 in the world in terms of assets. And it was 28% larger than the 2nd place bank in asset terms, which was Deutsche Bank. Both those banks have had one hell of a time working out their assets after the financial crisis. Deutsche Bank is still struggling with it even now. In RBS's case, obviously they expanded too fast, but they were part of the consortium with Fortis and Santander that bought ABN AMRO with disastrous consequences in 2007. Well, it was disastrous for Royal Bank of Scotland because they just got the assets that were no good, the wholesale assets, and it was disastrous for Fortis. But it actually worked out very well for Santander. Santander's in 9th place on the ranking. So Santander did brilliantly from the deal because they got two good banks, retail banks, Ante Veneta, which was the Italian bank, and they sold that on to Monte dei Paschi in less than a year at a profit, got all their money back. And they bought Banco Real in Brazil, part of building up their Brazilian franchise. And today, Santander is the 3rd largest bank in Brazil. It's a fantastic franchise for them. And they also bought, as you know, Abbey National in 2004. And I think they've done quite well with that. So the thesis of tonight may be that in general, banking acquisitions don't go terribly well. But in the case of Santander, they seem to have gone extremely well. In 6th place, you've got Wells Fargo. They've also done rather well because they bought Wachovia in 2008. Wachovia was another bank that was in trouble due to the crisis. Citigroup wanted it, but Wells Fargo got there first, and that sort of cemented their position as a much stronger bank. I know they've had their corporate governance issues subsequently, but they're still a pretty big player in the US market. So, ladies and gentlemen, that brings us up to 2019. And as I promised, 2019 is a Chinese ranking. So there we have the 4 big state-owned Chinese banks. They're state-owned, but they also have a public listing. ICBC, China Construction Bank, Agricultural Bank of China, dominating the ranking. Then you have the American banks, the ones that we've talked about, JP Morgan Chase, composed of all those different parts, Bank of America, Wells Fargo, Citigroup, HSBC still holding there for British banking. I don't think it's going to last there much longer given what's going on. And Mitsubishi UFJ. So that was 50 years of banking history in about 20 minutes. I'll just give you a few more ideas and then we'll sort of throw it open to questions. But one of the things that's clearly happened over those 50 years is that banking has grown exponentially. So to give you an example of what I mean by that, if you remember when we looked at the 1970 ranking, the Bank of America had assets of 25 billion to come top. ICBC, this is its tier 1 capital figure, but its asset figure is 4,000 billion or 4 trillion. That's 160 times larger than Bank of America was to come top 50 years ago. Now, you're all economists, and I'm not actually, but my estimates are the world economy has grown about 4 or 5 times in that period. So banking seems to have done an awful lot more growing than the world economy, which obviously leads you on to questions about whether the banking sector we've got is too large for our economic needs. Another point I'd like to raise is, well, will these Chinese banks stay strong? I mean, I'm hoping to demonstrate to you this evening that not necessarily, because we don't know what's coming down the tracks. At the moment, on this slide, I'll show you, this is, in the current ranking, this is the top 5 countries by profits. So Chinese banks collectively make the most profits, 312 billion, and that's about 1/3 of all the profits of the top 1,000. And then you've got the US banks, which make 255 billion, which is a fair chunk. Then you're down to much smaller numbers. Canada, France, the UK are all around 47, 44, 43 billion. So banking is a very unequal business, and the profits are very much geared towards Chinese banks at the moment. This is the individual banks that make the most profits in absolute terms the world over at the moment. ICBC, China Construction Bank, JP Morgan Chase is in there, but you've got 3 Chinese banks, as you can see, and Bank of America in 5th place. And it's interesting, we're not quite comparing apples with apples because we've got a net income figure here, and the ones I had in the country rankings were pre-tax profits. But pretty much, ICBC makes as much as the whole of the UK banking sector does put together. So will this situation last? Well, the Chinese banking system has a whole lot of problems. It certainly has an asset quality problem. They've had a massive property bubble, and we know what happens with massive property bubbles. They've got a shadow banking sector, which resembles in many ways the subprime sector in the United States ahead of the financial crisis. They've got competition from the tech giants, which are particularly strong in China. Alipay, Tencent, WeChat. They've managed to get hold of the retail market in a way that banks in Europe and the Americas have managed to hold on to it, because it's a very deregulated market, ironically, for a former communist country. And basically their banking sector is too big. So their banking assets are about 3 times the size of the economy, 3 times GDP. And China reflated after the financial crisis by pushing all the money out through the banking system. Well, if you do that, you know for sure you're going to get a lot of bad credit. So what's going to happen now? China's slowing down. We've obviously got the coronavirus issue, which is obviously maybe a sort of tipping point on China's slowdown. And we had a rating agency report in recently that talked about the spike in NPLs that they were expecting as a result of the Chinese economic slowdown. And they're talking about sort of 6 or 7% NPLs, which is not disastrous, but it's not terribly good either. Another point I'd like to make is just about the impact of the financial crisis on the ranking, or what it can tell us about the financial crisis. So if you want to boil the financial crisis down and what it means to banks into 3 very quick points. So we've seen a massive increase in capital since then. Banks are less profitable than they ever used to be. And we've seen profits move eastwards, basically, to Asia. So this is a graph of the capital, the Tier 1 capital. You've got 08 on the left, 2019, so you're sort of just slightly over 10 years here. But I did it out to 08 because I wanted to capture the years just before the crisis. So you can see you've got a big upward move here in the amount of capital being held. This is over the top 1,000 as a whole, but you can see how much it's increased. It's really gone up about 3 times in terms of how much capital. And compare that to the assets, and the assets is much more of a straight line. So banks are holding much more capital against their assets, which should, in theory, make them much safer. But it still depends on what you've got on your asset side of your balance sheet. This is looking at profits the same way. So you can see that in 08, when the financial crisis was starting but hadn't really shown up in the bank accounts yet, you had healthy profits. Then you have this huge dip to 115 billion when you're going through the crisis, and then it takes until 2014 to actually get back to a profit figure that's higher than pre-crisis, and then you've carried on up, increasing since, but certainly not on the scale of increases that we probably saw in the run-up to the financial crisis. And if you want to look at it in terms of return on capital, which of course is what in some ways is more revealing, you can see that we haven't got back anywhere near to the returns that were being made before the crisis, when you've got 20% as an average figure in 2008. Don't forget that's just an average figure. So you had lots of banks that were making returns on capital of 25 to 30%. In fact, if there's one indicator that should have been a warning to the regulators that something was going wrong, is that why on earth were these banks making so much money? Clearly there should be something wrong in that. You should be asking questions. Then in 09 it goes right down to less than 3%, and then it starts to recover, and it's in the 13s now. Ignore the 10% in 2019 because we've changed the way we calculate it. So instead of calculating on pre-tax, we started to use net income, so it makes it drop. If you did it the old way, it would still be up at about 13%. But the point is that again, you've got banks that are making more than that, but you've got banks, especially European banks, that are making single-digit returns on capital, which is not really enough to keep the shareholders happy. And I said also that banking profits have moved eastwards. So here we can see that in 2006 in Asia, the banks made 20% of global profits. In 2019, they make 42%. And in Europe, the figure's gone almost the other way. So in Europe, before the crisis, 43% of profits were made by European banks. Now they're down to 21%. So they've almost swapped places. North America interestingly enough, has kept its share at about 27%. And I put that down to the fact that the United States made a much better job of dealing with its banks' problems than we did in Europe. They basically said, they called them all in, and they said, you've got to get this sorted out really fast, get all this crap off your balance sheet, recapitalise. Whereas in Europe, we've tended to go for more of a zombie approach, haven't we? We've just let people sort of drift off and do it quietly and slowly. And the problem with that is it doesn't really get done at all. So a fourth point about what does the ranking show us is that inequality in banking is increasing. The big banks are getting bigger, and they're taking a bigger share of everything. So if you look in profits terms, ICBC, the Chinese bank that tops the ranking now, makes about 4% of all banking profits in the world. If you take the top 5 banks, I showed you the top 5 ranking, if you add them together, you're talking about 15% of total banking profits. Same story is true with capital. If you go back before the crisis in 2006, you added the top 10 banks together, their tier 1 capital, it would come to about 20% of the total. If you did it now with those Chinese banks and the Americans, it would be up to 25%. So this leads you on to the whole debate about too big to fail, and is it healthy to have these huge banks on this scale, and what will happen if any of them get into trouble? If you took it from the banker's point of view, they would say it's only having this scale in a business that's becoming very commoditized, where margins are getting thinner, that actually allows you to make any money. So inequality. I thought I'd show you the situation in the UK. This is the top UK banks by profit. And last year, I know HSBC's just come up with some really crap results, but last year HSBC made nearly half of UK profits. And then if you add in the other big banks, so you get the top 6, you've got Lloyds, Barclays, RBS, Standard Chartered, and Nationwide in there. If you add all that up, it gets you about 91%. And if you put Santander in, of course, which is a Spanish bank, it would get you to about 95, 96%. So basically, UK banking profits are made by these big players, these 7 big players. So all the talk about challenger banks, Revolut, Monzo, Starling, Metro Bank, being a sort of threat to the major banks or being highly competitive, well, they're just not showing up in the figures as yet. So finally, let me just say a little bit, this is the good news. So if you want to make money out of banking, you obviously don't want to be in the UK. You want to go to probably Africa or Central Asia. You want to go to an emerging market where people are still getting their first mortgage, their first bank account, their first credit card, where interest rates are still at reasonable levels and there's not so much competition that you're just being sort of beaten around. And this shows you the best places to go. So this is return on capital by region. Central Asia and Africa are up there. They're still getting returns that the banks were getting before the crisis. But if you come down the ranking, obviously you find that in Europe you're getting a miserable 8%. And most analysts think that if you're only getting 8%, you're actually destroying value because you're not returning enough to pay for your cost of capital. North America's done better. North America's at sort of 15%. But obviously you want to be in the Caribbean or South America or somewhere where you can make some proper money. So there are opportunities in banking as well as challenges. But I think my sort of key points, which I made at the start, are banking's in the midst of change now. There's no question about that. It's in a bit of a hiatus as an industry. But I think over the 50 years, you'll agree, it's always been in this rather delicate position. Things are sort of either storming ahead or they're being pushed back. Different banks are coming to the fore. There's sort of big mergers and consolidation going on. And so I'm quietly confident that the banking industry will come through this. And if you want to read more about the whole 50th anniversary and the changes that have gone on, you need to get hold of the Banker magazine in March because it's the cover story. And you have to go to thebanker.com to find that. So that's my remarks, ladies and gentlemen. And perhaps we can have some questions now or some comments. Thank you. Yeah, I think you were first, yeah?
Thank you very much for all the work you put into this. The metric that interests me,
Yeah,
that you've missed,
yeah,
is how did shareholders make up? Okay, and when I look at, the banks, and I have done some work on this,
yeah,
I wonder, over this 50 years, if you were a shareholder of a bank,
yeah.
where were what banks got returns?
Yeah,
if
it's
you
good.
add in capital and dividends?
Yeah, it's a good question, isn't it? Well,
It is.
yeah,
Because, this is all really interesting, but, as a shareholder and as a holder of pensions and things.
yeah.
Like, who the
Well,
hell
there's
really made money?
Well, there's been some spectacular own goals, hasn't there? So if you think about, to give you a few sort of sections to that answer. So it's like, if you think about the investment banks, for a long time, it was the investment bankers that made the money, wasn't it? It was a bit like investing in a football club, the players are paid magnificently, and the shareholders, just have to pour more money in. And that was, very much the case with the big investment banks during their heyday. And no one ever really seemed to solve it. So that was certainly very bad for the shareholders. If you think about the more reliable banks, so Lloyds Bank was considered, the bank for paying dividends, but then of course it was until they got hold of Hsbc and screwed the whole thing up, And there were obviously a lot of retired folks who depended on Lloyd's dividends. So the answer to your question is obviously there are banks that do make money. The Brazilian banks have been a very reliable source of.
I'm talking for shareholders.
Yeah, for shareholders.
So if you go back to 50 years,
Yeah,
okay, and you take a share of Bank of America,
yeah,
and you look at where you are today,
yeah.
of all those banks you've listed, where did people make money?
Yeah. Well, I don't know the answer. If you want to sort of over 50 years, and I wouldn't have the answer on the top of my head because it doesn't show that. But
Anyway,
but my view definitely is, I don't think banking has been a great investment for shareholders,
absolutely.
and you certainly wouldn't get it by being a buy and hold investor. You definitely need to be moving around, right?
Next question.
Yeah. Yeah. Go with that.
What do you think the next 10 years, if you do this in 2030,
Yeah.
we're going to see ignoring coronavirus?
I don't think you want to. I don't think you want to ignore coronavirus, because I think coronavirus is very critical. I think this is a sort of tipping point. There's obviously a lot of build-up of problems in the Chinese economy, and I think this is going to be quite significant. I think maybe even politically as well as economically, right? Because the people have lost confidence in the government, right? So they're going to have to respond in some way. Now, what does that mean for Chinese banks? They're definitely too large, okay? So they've definitely got to have a workout and come up with an industry that looks more streamlined and sensible and serves the real economy. At the moment, they lend too much money to state-owned enterprises, not enough to the private sector. So there's definitely a reform to be done in China. So my guess is that in 10 years' time, it will be back perhaps to more of a global ranking. Maybe the European banks have got themselves together by then. Maybe you've got one or two big emerging markets starting to come in, a Brazilian bank or an Indian bank. I don't expect the Chinese banks to be in that position in 10 years' time. It would be very strange if they were.
How do the liabilities or sources of funding of the Chinese banks differ from the rest of the world? Is it state sourced?
Well, it's mostly deposits, actually. Yeah, well, and companies, yeah, state-owned companies. So a state-owned company in China, I think, would be obliged to put its deposit funds in a state-owned bank. Chinese savers, of course, Chinese, first of all, they're big savers, aren't they?
Yes.
But secondly, they haven't had as much access to the stock market until quite recently. So I don't think the sources are that different. I mean, what is different is, as I understand it, the Chinese banks are much more commercial banks to lend to industry. Okay, they're not really retail banks so much, which is why that Alipay and Tencent have been able to come along with a product where you set up a retail deposit account with them, and you basically have your bank account with the tech company. And the banks have not been as worried about that as you might expect, because they didn't really have so much of that business. So I think, yeah, I mean, they're more dependent on commercial deposits perhaps than say, a high street bank is in the UK. Yeah.
You've mentioned a couple of times the size of the banks. Are they some of them too large? Are they too small?
Yeah.
If you're too small, you haven't got the scale to service large customers. If you're too large, it becomes unmanageable, and there have been all sorts of disaster stories with rogue traders and bad acquisitions and so on. So if you're advising the board of a bank, what is the right size for a bank?
All right. Well.
And the right spread, right?
Yeah.
A lot of different things.
All right. So
size and spread and geographical spread.
well, I think the thing is, you either want to be big or small. You don't want to be mid-sized. So the problem is for the middle-sized banks. Okay. If you're a large bank, you know, some of the sort of big business like foreign exchange and transaction banking and these scale businesses, which are, you know, very low margins, but you can do them on scale and you can do them internationally, and you'll have really less than 10 banks that do those banks. All the other banks in the world will plug into you and do the business through those big banks. So they're okay, right? And because they are so big, you know, I mean, they can afford the new technology and the technology investment that they need to have, and basically, and the sort of cost of regulation. If you're right at the other end, there are quite a lot of examples of small banks that are doing quite well. Some interesting ones in the UK, actually. So I don't know if you know about Oak North Bank. So some of the banks in the UK are doing quite well by basically taking away old-fashioned business that the mainstream banks don't want to do. So Oak North Bank just does business loans, and almost every business loan they do is a referral from a mainstream high street bank. And they have an old-fashioned credit committee, and they give you a decision within an hour, and they claim they've never had a bad loan. But if you're in the middle, I think you're kind of stuck, because you don't have that sort of boutique franchise, which makes you attractive, and you don't have the scale to survive. So my answer would be, yeah, you've got to go one extreme or the other.
Following that, can I ask you about crowdfunding?
Yeah.
Does that take in the same way the stuff that the banks just aren't lending? Or does that represent a whole new and growing sector?
Yeah, I mean, I think it's obviously people that feel that they can't get funding through the banks, isn't it? On the borrowing side. Then there's a question of, you know, who's doing the funding. So, I mean, the problem with crowdfunding and those kinds of businesses is that it's not clear that the investors understand the risks. Because obviously the point about putting your money in a bank, even though the returns are so bad, is that you're not making a loan directly to a particular business. It's being spread around, isn't it? So your risk is the bank risk rather than the credit risk. Whereas if you go into crowdfunding or some of the other, you know, Zopa and these kinds of people who set up and they do the same sort of thing, don't they? You know, I mean, you're basically getting the risk of the credit more directly. The returns are good, yeah. But the risk is high. So.
But does it, final thing, does it represent a very small fraction?
Yeah.
It still does, and it's likely to easily.
Yeah.
Okay.
How much damage is negative interest rates doing to European banking?
One hell of a lot. Yeah. Well, as I was saying to you earlier, I mean, I think that quantitative easing has done more damage to the economy and banks than the financial crisis. So I think the cure is worse than was worse than the disease. You know, I mean, fine. it was successful in negotiating us out of a depression, if that's what was going to happen. But now economies are addicted to cheap funds, and the banks can't make money with interest rates that low. Negative interest rates distorts everything, doesn't it? I mean, getting your head around it's just kind of sort of bonkers, really. But I mean, I see no signs that low interest rates for a long period of time encourages banks to lend more or lend more successfully. I can't see any evidence for that whatsoever.
It's a very important statement.
Yes?
Do you think in the next 10 years cryptocurrencies such as Bitcoin will have an effect on the banking industry, and if so, will it be good or bad for the banking industry?
Yeah, well, I think they're going to have an impact on the payments industry. So I think there is a role for crypto coins. I mean, I think the Facebook Libra project, which is a sort of remittance service, really, has some possibilities. I think they will start to get more regulated. But the bigger question behind all this, really, is do the tech companies that get into those kinds of things, do they want to become banks? Because that's what the banks fear, right? So they're not worried about competition coming from the fintechs, the small guys, because they think they can buy those. But what they're scared about is if Google, Amazon, or one of these people, whether it's a cryptocurrency or whether it's some other kind of payments mechanism, moves into banking. Now, for the time being, the biggest deterrent is that they don't want to be regulated like a bank. So it'd be best to stay out of it and just work with a bank. Because at the end of the day, I mean, whatever you do at the front, it's the banking system at the back that, that transmits the payment and keeps the money somewhere, right? So you may be losing your front end relationship with your customer, but you've still got the payment in the system. But the only thing is, which is kind of interesting, is so what's it? Mark Zuckerberg came out the other day and he said he wanted to pay more tax and be more regulated. All right. Well, if you're going to pay more tax and be more regulated, well, then you might not think that being a bank is such a problematic move. So. Yeah, of course.
What do you think the impact on level banking is going to be of the Americans' new habit of projecting power by restricting people who can clear dollars through the US banking system? Because it's a lot of this.
Well, what's obviously happening is that people who are really outside of the American loop, which is the Chinese and the Russians, are busy setting up their own payment systems. And it's a huge question. So I think the Chinese are going to try and set up an alternative to SWIFT, which is like the bank messaging system. Because the people at SWIFT, they wouldn't say this, but I can tell you, they are so pissed off about what's happened. Because they regarded it... So SWIFT is like a bank messaging system. It's a cooperative run by the banks. And it's supposed to be politically neutral. All right? But they were obliged, really, to cut the Iranians off. And they were not happy about that. Because as soon as you bring politics into it, and a lot of what the banks were doing in New York, where they get called out, like Standard Chartered, for example, BNP Paribas, have all been done for doing deals which basically ended up in Iran or some other sanctioned country. They thought what they were doing was legitimate, right? And they sort of thought that even if they weren't obeying the letter of the law, they were obeying the spirit of the law. And so for America to start interpreting it differently, and as you say, to use the banking system as a political weapon, highly negative. And I mean, in the long run, I think, it will lead to alternative systems being set up. And I mean, we're still a long way from seeing the dollar lose its role as the dominant currency. But, I mean, in 50 years of banking, things have changed a lot. So why shouldn't the dominant role of the dollar change as well? Okay.
Looking
Yeah.
at the sequential
tables and going back to where you started with,
Yeah.
measuring the league table based upon assets,
Yeah.
total assets, and then switching to return on capital. Which
Tier
is
one, tier one.
Tier one.
Yeah.
Oh, yeah. Then do you think there is a correlation, because I'm sort of seeing that in that time series, between bloated balance sheets and then subsequent underperformance, unless underwritten by government? And surely the message, though, and if that's right, then the Chinese government, of course, will most certainly carry on underwriting the debts. It's not
Yep.
going to change that.
Yeah. Well,
Maybe in another 10 years' time, we will still see the Chinese banks.
well, it's a very important point. So, could the Chinese banking system have a meltdown and we might not notice? Right? Because, yeah, the Chinese government will try to intervene. They've got a huge amount of funds, and they'll come up with some way of dealing with it that's kind of sort of non-market. And they already did that once. So they had a banking problem about sort of 15, 20 years ago, and they set up all these sort of asset management companies to work out the bad debts. So it may be that there will be a restructuring of Chinese banking, but it may not happen in exactly a Western style, So an American style where everything goes crash and you rebuild it, I don't think that will happen in China. It may well be that they have, they become more and more aware that they've got a problem, a bad asset problem, and they find ways of working it out which are not quite so catastrophic.
What's happened with the local government banks that were sort of major credit creditors? They had collapsed, didn't they?
Yeah, they've
Up by the Chinese government, that's already happened in the sense.
they've had some banking collapses in China, and
If they merged into other things, or did they
in some cases they've just let them go. Yeah, so if you're a small enough bank, they just let you go, and savers take a hit. But they've definitely got a real problem, as I referred to. They've got this sort of shadow banking sector, where banking assets have been taken off the balance sheets of the mainstream banks, put into like these vehicles that are wealth management vehicles, and they've sold bonds on the back of them. Okay, so you've put all your risk in some little securitization vehicle, exactly the way you did in subprime. All right, it's one last question there.
One of the things that you brought up, which I find shocking, is when you talked about Bank of America being number one and having 25 million in assets, and then the lead bank now is 160 times
Yes.
in assets. So, we like to think we're in a world of no inflation, but how much of that 160 times is something real, and how much of it is just financial asset inflation?
Yeah, I think the latter. Yeah. So clearly there's a debate, isn't there, which has been going on about what would be the appropriate size of a banking sector if you wanted it to serve the real economy.
Mm-hmm.
And clearly, in the run-up to the financial crisis, you had a whole lot of derivatives and securitizations. It was basically just creating financial assets for the sake of it. So, if the question is the banking sector too large? Well, it's almost the worst of both worlds, isn't it? Because it's not serving the real economy sufficiently. When you talk about loans to small growing companies, it's not doing a very good job, which is why you've got venture capital and private equity coming along. But is it creating a lot of assets that don't really have too much value? Then yes.
Last one, very quick question. The definition of Tier 1 capital,
Yeah.
how rigid is that and consistent across the countries?
Now it's pretty consistent. So under Basel, and we actually make sure that the banks that supply the numbers conform to our definition, which is pretty much equity and reserves, I think. Okay. The whole issue of Tier 1 capital has become much more complicated because I've got a little graph, but it shows you all the different components of it now. So it's Tier 1 capital, and then it's hybrid, and a whole bunch of other stuff, Tier 2 capital. But Tier 1 capital at its core is equity and reserves. Okay.
Okay, well that's, I find that rather exciting actually. For a subject that's incredibly dry, I think Brian's done an incredibly good job of walking us through 1970 to 2019, which is in a very short time, and I can even think musical chairs of all the bankers changing position as they get overconfident, overexpand, crash, and that sort of thing. The answer to one of the questions here, of course, if you think of the price of a house that was built maybe 100 years ago and track that in the middle of London over the last 100 years, that's probably what inflation is all about. The inflation of capital makes it impossible for young people to get on the ladder. The warning signs of a crisis in China I thought was particularly interesting, but perhaps the most concerning, the subplot, is the lack of returns of European banks and the negative interest rates that go with it, because if that goes on for very much longer, Europe is going to just fritter itself away. It cannot survive without a profitable banking system because they'll start to collapse. So I think there's a lot of lessons to be learned and a lot of optimism. So, Brian, thank you for an extraordinary round robin of something which was really a dark art as far as most of it are concerned. Thank you.
It affects the whole, right? So I remember walking into a bank office in